Now, all eyes are on the SBI and whether they will withdraw their Pioneer teaser loan scheme at the end of December. We'll keep getting you updates on that story, but for the moment, let's move on to the hybrid product that has caught everyone's fancy, and we're talking about monthly income plans, or MIPs. What exactly are they? How do they work? We're giving you the entire lowdown.
Monthly income plans, or MIPs, are debt-oriented mutual fund schemes that generally invest up to 80% in debt and the rest in equities. MIPs aim to provide investors with regular payouts in forms of dividends.
A mix of equity and debt, and now of course we have a couple of products, including one from us which has equity and debt and gold.
The assets of MIPs have grown quite robustly since the end of 2009. The assets of the two largest MIPs in the market, HDFC MIP Long Term and Reliance MIP, have grown about 150 and 200% each. The experts say it's because of investors maturing to the product.
A lot of money has come into MIPs, and I think the investors are happy to have some part of their allocation to MIPs also. So I think the product is maturing now. It wasn't a matured product in my opinion up to now.
So where do these schemes invest? MIPs invest mostly in debt instruments like commercial paper, certificate deposits, government securities and treasury bills. They are also affected by interest rate changes. When interest rates fall, NAVs rise, and when the rates rise, the NAVs fall.
The risks associated are the risks which exist in each of these asset classes, but then they can be minimized very, very sharply as far as an MIP is concerned.
MIPs aim to provide steady returns with limited volatility.
I think 9 to 10% return from an MIP is a very good return, because your downside is low, your risks are much lesser than what they are in a 100% pure equity fund.
Morningstar India says that MIPs make sense for investors who are wary of stock markets but still want to have a conservative allocation to equities.
Alright, so that's what MIPs are, but what will happen to them going ahead from here? Will the interest sustain? Anil Chopra is the Group CEO of Bajaj Capital. He's joining us after a very small break here on Smart Money. Whatever your questions, don't forget, you can always write across to us at our email ID, which is smartmoney@utvmoney.com. We'll be right back. Hello again, you're with Smart Money this evening here on Bloomberg UTV. We're factoring in all the news, telling you exactly where you should be investing to be able to get the maximum returns. Now, we've been discussing MIPs, the hybrid product that is something that a lot of financial advisors are suggesting these days. Monthly income plans, MIPs, they are debt-oriented mutual fund schemes. They generally invest up to 75 to 80% in debt, and the rest is invested in equity instruments. So, what will happen to them going forward? To tell us, we have Anil Chopra, the Group CEO of Bajaj Capital now. Anil, thank you for joining us here on Smart Money. Some MIPs have done really well for themselves. They've grown over 200% in the past year, like MIPs of Reliance and HDFC. So why do you think this is, and what has worked for them?
Well, see, as you know that MIPs are a combination of equity and debt. And predominantly they are dominated by debt, because about 80 to 85% money goes into debt schemes, and both HDFC and Reliance are known for their treasury operations, for their expertise in the debt market operations. So they have been able to make some very good calls in terms of the interest rate movements, and have been able to ride over it and give good returns. And on the other hand, when it comes to equity portion, which is about 15 to 20%, that has done very well for the whole industry. So no wonder that these two AMCs, which are known for their debt market operations as well as expertise in the equity markets, they have been able to over-deliver the returns better than the promised. So that is why they have been able to collect huge amounts. And as I mentioned, HDFC currently manages about 9,000 crores in MIP, and Reliance about 8,000, about just under 8,000 crores. So these two have occupied major market share in the MIP field.
Okay, Anil, but going forward, what are the factors do you think are going to determine how MIPs do? Will they continue to fetch in good returns?
Well, of course, interest rates are close to their peak, and we are expecting interest rates to come down slowly, maybe 3 to 4 months from now. And when interest rates fall, we all know that debt markets tend to give higher returns. So they are poised to take the advantage, of the falling interest rate, which should happen any time from 3 to 4 months from now. And equity markets, still all experts feel that in next 2 to 5 years, they should give decent returns of about 15 to 18%, and if not much in excess of that. So from that point of view, it still looks a very safe and very good option to put your short-term money. I would repeat, MIPs are good only if your goal is coming in next 2 to 3 years. If your goal is about 5 to 7 years away, then they're not a good option. If your goal is only about 6 months away, then also they're not a good option. Only for your mid-term money, which if the goal is coming in 2 to 3 years, it makes greater sense, because in next 2 to 3 years we are expecting interest rates to come down, thereby NAVs of the debt side to go up, and equity markets are expected to do well anyway.
I know that's sound advice. 2 to 3 years. If that's your investment horizon, then MIPs definitely make sense for you. Thank you, Anil, for your advice on this. But also, let's get in Radhika Gupta. She's also joining us here on Smart Money to tell us which are the best MIPs right now to be able to invest, to be able to park our money. Radhika, thank you for joining us here on Smart Money. Which MIPs do you think are the best in the market now, and why?
There are two MIPs that are good. I think by far the best one is one by HDFC Mutual Fund. It's called the HDFC MIP Long-Term Plan. Fund manager is Prashant Jain. The equity piece of that is managed by Prashant Jain, so that's done consistently well. And the debt piece is also done very, very well. So over its history, the fund has clocked up about a 12% return. And has been pretty consistent in its performance. The other one is in MIP Birla Sun Life 95. They've also got an MIP that's also quite good and has really been consistent in their performance. And again, the credit quality from what we see on both of the portfolios has been pretty okay. So that's really what you have to look for in an MIP, consistency of performance. And these are the two funds that have kind of delivered on that.
Now, after taking a very small break, we return here on Smart Money. Remember, whatever questions you have on your mind with respect to your investments and any of your instruments that we're talking about over here, all you have to do is send them across to us at our email ID, which is smartmoney@utvmoney.com. But coming up just after this break, like I was telling you, what you can expect on your fixed deposits, that's changing very quickly and all in our favor. We'll tell you more. Don't go away.